right. Well, welcome everybody to our recorded event. My name is Anthony Speciale with Traders Agency. I hope you all had a wonderful, or are having for that matter, a wonderful weekend. I know this past week has been was a little stressful for those of us who are not prepared or nimble enough to navigate the market to the downside. But what I'm going to do today with you is we're going to essentially walk through, what I consider the major markets. Quick disclaimer on I'd encourage you to visit our website www.tradersagency.com to view this in writing. But trading and investing involves risks. You should be well aware of those risks. If you're unable to, or you feel you're incapable of representing yourself and your own finances, we strongly recommend that you seek advice from a licensed financial professional, that being a broker, dealer, a fiduciary, an advisor, somebody who is licensed to, and able to interpret your particular financial well-being and then put that into action when it comes to investing your money. So again, if you're not capable of doing it on your own, we strongly recommend you find somebody to give you a hand. With that, what I have here to offer you today is simply my opinion, my research, and ultimately what you do with it is up to you. So again, to view our legal disclaimer, you can visit us www.tradersagency.com and view that there for yourself. So I'm going to walk you through 8 markets today: the Dow, the NASDAQ, the S&P, the Russell. We're going to look at gold. We're going to look at oil. We're going to look at Bitcoin, and we're going to look at the dollar index. So that should give you a fairly decent stroke of what's going on in the market globally, or at least here in the United States, and how it's being interpreted from global activity. So what you see in front of you that we're going to start off with is the Dow Jones Industrial Futures Average. You could see in the top left here, this is the YM exclamation point. Now, if you would like to access any of these at any point in time before I even dive in here, you can do so by simply finding me on TradingView. You could search for Speciale Analysis. That's a picture of myself, my lovely wife, and all of these get updated every week. So I do this, for my students here at Traders Agency. I do this for myself, for my friends, for my clients, things of that nature. But I do this so that you all have, some kind of reference point. Not only do I do the major markets, but I've been watching Delta, I've been watching Ford, I've been watching Apple and Bank of America and Facebook and a whole bunch of other stocks. So you should be able to find a whole bunch of relative information if you can easily relate to my approach to the market. So, the point is so that you have access to this information. That's what most retail traders don't have, is access to information. It's easy to get into this business. You fire up your cell phone, you fill out the questionnaire on Robinhood, you load up the app, you transfer a few bucks, and guess what? You call yourself a trader. This industry does take a little more, a little more knowledge than doing just that. And that's what we are here to do for you. Myself, Josh Martinez, Ross Givens, Traders Agency as a company, as an organization, we're here to help you. We're here to serve you. We're here to try to make that learning curve a little bit better for you. So what you're going to see on my screens before we dive into the markets themselves, generic indicators, because some of you will go, well, where do I get these? These are all generic. This is stochastics, which simply reads overbought, oversold. That's all that does. This is relative strength. So when it's green, it's bullish. When it's red, it's bearish. Volume, right here. And then this is what we call a breadth indicator. So, as the market breathes up and down or to the downside, you can see that this breadth indicator really shows where the market is likely to pull back, where the market is accelerating. Moving averages, the purple is a 200, the pink is a 50-day. So when the 50 is above the 200 and prices above both, you're in a uptrend. When you have the 200, the 50, and then price, you're in a downtrend. So just to make it very easy for somebody who has zero knowledge of how to interpret what a chart looks like, if you can just simply put that in perspective, you'll very quickly and efficiently be able to stay on the right side of the market. And that's what most people fail to do. Now, the time frame we'll be looking at today are weekly charts. So meaning each candle represents one full week's price action. So just keep that in mind as well. So we're looking here at the big picture. My goal is to capture low risk, high probability trades in from the big picture, because I only need to make a little bit of money if I can do it over and over and over and over again. That's my approach to the market. That's what I teach my students. I come from a very conservative approach, and I do that so that I am very, very careful about drawdown. Now, I'll talk about account management very, very quickly. And I'm just going to use some very round numbers to keep it very simple. If you have a $10,000 account, each trade that you decide you're going to invest your money in, you should never invest more than 10% of your account. Okay? So each trade should never consume more than $1,000 of your account. Now, once you've placed that trade, your stop, after wherever you enter, the stop, where if this trade goes wrong, should never be risking more than 10% of that $1,000. So of that $1,000, you're essentially risking $100. So your account is $10,000. You're using $1,000 for each trade, and you're only risking $100. So at the end of the day, you have $10,000 and you're risking 1%. You can be wrong a lot of times before you ever run out of money. It's a simple rule. If you follow it, I promise you can be very profitable. But you have to follow the rules. And define whatever those rules are for yourself and make sure you follow them. This is a business of discipline and consistency. If you can master the discipline, master the consistency, master the skill set, you can make more money in this industry than potentially in any other industry that exists in the world, especially legal industries. So back to what we're looking at here. What is in front of you is the Dow Jones Industrials Futures Average. You can see here is our COVID low, right? This is where holy camoli, the whole world was falling apart. We had a global pandemic, haven't had one in over 100 years. Nobody knew what was going on, blah, 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 blah. Okay, we got through that. Most of us survived. We are heartfelt to those who passed away. Listen, there's no question about it. But with that, the world goes on. I've lost quite a few loved ones. I lost a lot of people. I've had quite a few people very close to me get sick, fall into issues, end up having strokes and things of that nature as a byproduct of this pandemic. And is it terrible? It is. But those of us who are well, those of us who are strong, those of us who are able to be here to help them, it's our job to do that. And that's what we're here to do, to help you, help yourself, help your friends, help your family, achieve the life you're ultimately after. So here is probably one of the longest, strongest bull runs in the history of forever. Basically off that COVID low to the recent high at the beginning of this year, placed us right here. Now you can see we were trending pretty strongly in this blue channel, and then the teal channel started to kind of slightly, level out a little bit before price started to ultimately descend. So just keep an eye right here on the 18th of January. This candle on this particular date is going to tell you a lot. This is the first time price action has closed below its 200-day moving average on essentially every major market. So you could see this was really a very, very notable turning point. And from here, this high went on to make a lower high, which ultimately went on to make another lower high. So as we had descending highs, we saw that the trend had ultimately changed. So what do we look for as the trend changes? Well, we want to find high prices in a downtrend where we can take a short opportunity. In an uptrend, we want to find low prices where we can find buying opportunities. It's really just that simple. I know people make it much more complicated than that, but it really doesn't have to be. So price action consolidated here within this yellow channel that I drew. You can see it retested the 200-day, came down, closed below the 50-day, and ultimately has fallen. Now here's where we placed our June low, and we are well closed below that. So we are approaching support on the Dow. Probably this week we'll be looking somewhere right in the 28,300 area. A close below this would offer a pretty decent fall towards 24,000, and a close below that may take us down to about 18,000, which would retest the COVID lows. These COVID lows are really on everybody's radar because, this is a 10,000 point drop, at least for the Dow. So that's what we're looking at as time continues to progress. So I'm just giving you some interpretation to what we see. Now, taking a look at the NASDAQ. NASDAQ is in the process here. Again, here's this consolidation area, retested towards the 200-day, closed below the 50, and is now working towards a target. If you're short the NASDAQ, I would anticipate some type of support to come in around 10,600, meaning I'm not saying that that's going to change anything, but we could see price test this area and then retrace into this pocket before we see it come down and retest this area and potentially break lower. So I'm expecting, and it may or may not happen, but I'm expecting some type of buying to step in around the 10,006, 10,500 handle, that area, that mid 10,000 mark. And then I would see that we had a really strong impulse down, and then we should get an impulse up again towards this area. And then we could have the opportunity to see it go lower if, in fact, that's what's in store for us. So, I mean, clearly you can see down here on the bottom, I mean, our breadth indicator is indicating that this market is weak. Our relative strength is clear that, this market is still in a downtrend. I mean, you can see that the bears are clearly in control. Take a look at the S&P 500. Again, here you got big, decent drop off. This week, I would anticipate potentially some support around 3,400. It may not be this week, but this week or the next week. In the coming weeks, that's what I would anticipate. You can see that we've turned aggressively bearish. We were holding a decent little retracement here, and then the bottom fell out. So we catch this somewhere in the 3,400 area. We break below that. We got 2,800, and then we have the COVID lows down here at about 2,100. So listen, this is going to happen in stages as long as this market keeps going down. And for those of you who were not trading during the 2000.com bust, and those of you who are not old enough to have lived through it, and those of you who just didn't study it like some of us have, the fact of the matter is when that sell-off, that bear market, I should call it, occurred, there was four 20+% rallies in that bear market. So meaning the market would come down, go up 20%, come down, go up 20%, come down, go up 20%, come down, go up 20%. That occurred 4 times before that market finally bottomed and finally recovered. Listen, if this market is going to continue downwards, there's a couple things that we can expect. We lost equities, we lost the indexes, we lost gold, we lost cryptocurrencies, this year so far. If this market is truly a bear market and we are going to go lower, next step is you're going to lose your retirements, you're going to lose jobs, you're going to lose the housing market, and you're going to lose the balance of, whatever commodities remain higher than they were pre-COVID. So there is a handful of pain coming if this market keeps going lower. Now, the benefit to that for me and you and anyone who is willing to trade this market both ways, long and short, there's a ton of money to be made. Now, I can tell you with 1,000% certainty, the most amount of money that I have made in the stock market has been in a down market. When the market goes down, it goes down fast and it goes down hard. When the market goes up, it's the old saying, you take the stairs up, look at how long it took to go up, and you take the elevator down, look at how quick you came down. So the market the market does offer great opportunities to the downside as long as you're willing to just interpret what's there and work with it. So the Russell is essentially sitting at where our June low was. This market has held up the best, the small caps, but a close below this black channel structure potentially next week could put us into the 1,300 handle to even 1,200 handle over the next coming weeks. So we're watching that closely to kind of see what is going to be next for the Russell, but the Russell is sitting on support at the moment. But if it breaks below this, as it tightens into this little corner here in this little triangle, you're going to see this fall. And if it falls, again, 1,300 is very attainable in the near term. 1,100 is not out of the question. Beyond that, we go to the COVID lows, back just a hair below 1,000. So again, don't think that this isn't going to work. Downtrend, 200, above the 50, price below all three. 200 above the 50, price below all three. Uptrend, 200, 50 is above, price is above. Okay, so here's your uptrend, here's your indecision, here's your downtrend. What happens is people get too focused on too small of a period of time and they miss the big picture. If the price is under the 200-day moving average, do not buy it. I don't care what it is. Unless you're trying to build a position in a company that you have as much certainty in life as death, that you want to buy it on weakness, which is fine, if that's your approach, then so be it. But to trade it, I want to be on the side that the big boys are on. The hedge funds, the banking industry, the money managers, the endowments, they're looking at this crap. They're looking at overbought, oversold. They're looking at relative strength. They're looking at 200-day, 50-day moving averages. They're looking at price action. They're looking at volume. They're looking at market breadth. They're looking at all the things that I'm looking at. And I'm looking at them because they're looking at them. Those guys make a lot more money than I do in the stock market. So if they're using that data, I want to use that data. It's that simple. All right, let's look at a few commodities real quick. We'll take a look at gold first. Gold is sitting at some long-term support. You can see price tested it, rallied hard, tested it, rallied hard, tested it, rallied, tried to fail at it, is really in a bit of indecision here. So what's going to happen for gold is price action is now going to interact in this area right here this upcoming week. And if we are to close below this teal line by more than 1%, we then have an opportunity to short gold. Now, gold had opened and closed here outside of this channel. It closed here and then reopened here below the 50-day, and we shorted it. And this was a really great, very low risk, high probability trade. Why? 200, 50, price was below it. So I'm not going to buy gold there. I'm going to short gold there. And we shorted it right to this channel structure. We did that simply because the market told us to. Look at what happened here. Okay? Let's look at the other indicators. Coming from an area of almost oversold, you can see that relative strength was bearish, and the market just pushed its way in. Getting a little pushback right now, but we'll watch it and see what happens. Here's the market breadth. Market breadth is selling. The market breadth is selling means that the likelihood is this market goes down, and that's exactly what happened. So if we can get all those things to line up, we can get a break or confirmation above or below some form of support or resistance, we have the opportunity to make a little cashola. Next up, we'll look at crude oil. Crude oil is sitting on, and I'll zoom out so you can see this. This is the 2018 annual high. So the high there is 76.90. So we have drawn, or 76.89. I've drawn this vertical line right here, this black line here, and I'm going to make it a different color. This way it's a little more apparent. Color, let's make this, what color don't we? We'll just make it gray so it looks different. So this is the 2018 high. My first rule in every trade plan I have is look left to find what is potentially coming when I look to the right, where there's no data. So the 2018 high is containing price action right here. So price action for this upcoming week is going to trade between this descending yellow resistance channel and this 2018 high support. So as long price is going to eventually tighten into this corner, and one of two things is going to happen. We're going to break out and go higher, or we're going to break out and go lower. And that would put us into the mid to lower 60s over probably a pretty short period of time. Now, looking at my indicators, my relative strength is bearish, right? My 200-day is above my 50, and both are above price. That's bearish. My volume is bearish. My market breadth is bearish. So the likelihood is I'm probably not looking to buy this market. I'm looking to sell this market, but I'm not going to do it until I have confirmation. And that confirmation would come from a close below this 2018 high by more than 1%. So if this week comes and closes down here, then I'm in business. If it, walks its way into this corner, it could take 2 or 3 weeks. But I have nothing but time. I will wait. I'll either look for somewhere else to trade or I will just simply wait. In this instance, I'm going to simply wait because I'm not going to force a trade to happen. It'll happen when it's good and ready to happen. Now, for those of you who want to be alerted when this does happen, I run a program at Traders Agency called the Speciale Report. And if you'd like to be part of that program and be notified when I'm going to be entering a trade based on this price action, settling and confirming, you can do that for just $5 today. Inside the comment box below this video, there's a link. All you have to do is click on it. You'll be taken to an order page. It'll tell you everything about the program. You're going to learn about the live classes. You're going to learn about the checklist. You're going to learn about the how-to videos. You're going to learn about our weekly analysis that we deliver to you. You're going to learn about all the content that you'll have and all the access you'll have to me personally and Traders Agency for you as the student to learn from. So if you want to get involved in that, $5 for the entire year. And not only is it only $5 for the entire year, I will de-risk your investment in yourself today by guaranteeing you that if at any point in time during the next 365 days you are not happy, Traders Agency, will return your $5 investment in yourself. So I'm offering you a 100% money back guarantee for the next 365 days. You can consume as much of the content you want, keep all the checklists, keep all the data, keep all the recordings, everything you want to keep is no problem. But if you're not happy, we'll give you your $5 back. So that's the best deal that you're probably going to run across today. So if you want to do that, you can click the link in the chat, the comment section below, and get started. So just put your information in. Again, it's just $5. And next Wednesday from 2 to 3 p.m. Eastern Standard Time, you can join me live in a Zoom room where we will be discussing, me and my members, my students, we'll be discussing the market. We'll be discussing oil particularly, but we'll be looking at the broad markets and we'll be looking at whatever trades you want to look at as well. So come prepared with a list of tickers you would like some insight on. So if you want to do that, I invite you, I encourage you, we'll have a little bit of fun together. Next market I want to take a look at is Bitcoin. Now, I'm not a crypto trader, full disclosure. I thought this was a bad idea from the word go. Had I thrown a little bit of money at it, I would have been happy to have made a little bit of money, but I only invest and trade things that are really a deliverable product. Gold's a deliverable product to me. Oil's a deliverable product. Stocks are actual live companies that employ people and are productive members. They pay taxes and they exist. They're actual entities. So Bitcoin, this whole crypto thing is a bit of an idea. I understand all the technicals behind it, but for me, I'm not much a trader of it. And I was telling folks to step out of the way simply because back here in May, I told them, I said, listen, Bitcoin's going to take its next leg down. Had you bought it cheap and you didn't start to sell out of it at 50, 60, $1,000 when it reached that point, I said to him, I go, listen, at about 31,000, I'm like, this thing's primed up to sell off. So if you don't, if you're not out of this, you should be like, you should try to get your money out of this thing. And that's what happened. So we started off with a stop here and an entry here, and then you can see it, we consolidated, we dropped, we consolidated, retraced slightly, and that's where it advanced our stop to. And then we've been dropping. So, what do I see? I see market was oversold here before it sold off. I'm sorry, overbought here, market sold off. Even as it was oversold, it came back a little bit. But the entire time, the relative strength was bearish. 200-day is above the 50-day, and the price is below both of them. My market breadth is all red. I have the majority of selling volume present. This is, this to me is step out of the way. This thing's going to fall. And basically what we're reaching is you have a high, a lower high, and now price testing another lower high. So the 50-day is really just keeping the lid on this thing, pushing it towards my projected target, which I've been calling now for many, many months. And you don't have to believe me what I'm saying. You can go to my TradingView account that I showed you earlier and look for yourself. You'll see that I've been posting an image similar to this as it's been progressing now for many, many months. I've been calling, at 32, I called for this thing to basically cut in half to 16, and we're on our way. I mean, this thing's, trying to hold on to 19 pretty carefully. So we're going to see what happens, but it is what it is. So I just wanted to let you guys kind of know, where we're at with this. Last but not least is the United States dollar index. So as the market has basically crashed on and off, the dollar index has been on an absolute tear. I mean, just take a look here. You've been bullish with relative strength consistently since January. So the entire year, this market has just been grinding higher. Market breadth is all green and rising. Volume, majority of the volume is green. You have the 200-day, you have the 50-day, you have price above. I mean, this is as clean of an uptrend as you're going to possibly find. You can see the trend was in this orange channel, and then the trend got even more aggressive in this yellow channel, and we're finding resistance here at the top at the moment. So this did pull back a little bit this week, which was surprising because the market itself broadly was down this week. But, this is what happens when a government distributes more unearned money than ever in the history of before, between PPPs and loans and, forgiveness and college debt and unemployment. And, you have a kid, so we're going to send you some money. Like, that's not capitalism. That's not free market capitalism. That does not work. Sorry. Some of you may believe that other than me. You're welcome to your opinion, but I can tell you factually that a socialized system that the government distributes money, goods, and services, and not free, away from what is, would be the definition of free market capitalism is not good for an economy. And that bill will come due. And what's happening right now is that bill is needing to be paid. And who's going to pick it up? We are. How are we going to do it? Taxes. It's just what it is. So the long and short of that is, well, everybody was hunky-dory for 2 years, and I got all this extra money, and I'm going to buy another house and another car, and I'm going to, renovate my house, and I'm going to put addition on, and I'm going to go on vacation and do blah, 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 blah. That bill is coming due, and most of those people that had splurged that extra, discretionary income that they had, they're now sucking wind a little bit, and it's just a bad place to be. So that again leads me to why I'm here. I'm here to help people be able to be completely dependent on themselves rather than the government, rather than your job, rather than all of that stuff. Trading has provided that for me. It's afforded me a lifestyle that I get to live on my own. I get the freedom to do what I want, when I want, how I want. And I came to Traders Agency to help others learn because for me, I struggled when I became a trader. I had a really, really hard time. I did it all by myself. It was a very lonely game. And I realized that, hey, if I had a mentor along the way, maybe it would cut down my learning curve a little bit. It would make it certainly a little bit more fun to have some interaction with somebody. And I felt like I could learn from somebody else's mistakes and maybe avoided some of my own. So that's why I'm here. And that's why I teach, so that I can try to help you guys cut down that learning curve, get closer and quicker to profitability, understand why the discipline and consistency is so important. And if you want to join me, again, $5. There's a link below this, this video here on YouTube. Click it. It'll take you to an order page. You put in your name, information, and we'll get you a login, your login credentials. If it doesn't get done today, it'll definitely be done Monday. And then Wednesday, you can join me for a live 1-hour training class where you can ask me questions. We can look at your stock market tickers, whether it be stocks, futures, Forex, indices, crypto, whatever you want to look at. during that 1 hour event, it is your time with me, and it's more than my pleasure to dive into whatever you'd like to discuss. So I thank you today for joining me for this recorded video. I appreciate you. Again, the link is below in the comment section, just $5. And at any point in time, if you don't like me, if you think I'm full of crap, if you don't like my face, you don't like my voice, you decide that trading's not for you, whatever it may be, we have a 100% no questions asked money back guarantee. We'll refund you $5 and we will part as friends. So if that doesn't work for you, I don't know what more I could possibly offer you. But with that, I wish you a beautiful and blessed day. Enjoy your evening. Enjoy the rest of your weekend. For those of you who are in the South and have been affected by this hurricane, our thoughts and prayers are certainly with you. Our Traders Agency family is Orlando-based. Mostly everybody I've spoken to is doing pretty okay. My own family in Florida is doing okay. But, we know that a lot of folks have been affected, and just, know that you are all in our thoughts and prayers. So we will talk to you very soon. And for those of you who are interested in getting started today, I will look forward to seeing you in class on Wednesday from 2 to 3 p.m. Eastern Standard Time. Have a beautiful day.